Well, that European slowdown that the governor was talking about seems to have pulled Spain right into the doldrums with some dire consequences. Bankia, the Spanish bank, which earlier in May asked for a €4 billion euro injection, now needs more like 23 billion euros. And in another development over the weekend, a barrage of 10,000 Facebook messages hit IMF chief Christine Lagarde after she branded Greece a nation of tax dodgers. Well, I'm joined now by Grant Williams, strategy advisor for Vulpes Investment Management, a Singapore-based hedge fund with global interests, and he's actually in Sydney tonight. Grant, welcome.
Hi, Tiki.
Just let me kick off with that Christine Lagarde comment about the Greeks being tax dodgers. What did you think of her speech?
I thought it was an extraordinary interview. It was carried in the Guardian newspaper in the UK. It's a high-profile newspaper. It was a high-profile outlet, and for someone of her diplomatic experience to come out with comments like she did, such as you just said about the Greeks being a nation of tax dodgers, was quite extraordinary. And one has to think there is some method behind her saying that, whether they're trying to force the Greeks into a certain situation whereby they have to agree to the austerity package come the election on June 17th. We really don't know, but it certainly was not just an off-the-cuff remark made by her on the spur of the moment.
Tension seems to be building all over the place. I mean, I look at the Eurovision Song Contest, Steve, and it was won by Sweden. Germany got a lot of points, I think 110 points. But according to the Renaissance Capital analyst who was watching, it got 0 points from Greece. And no surprise, presumably.
No, not really. I mean, it's a funny thing that Eurovision Song Contest, countries tend to vote in blocks. They vote who they like and who they don't like. I mean, my heart goes out to the poor analyst who had to sit and watch it, frankly.
You are more generally worried, though, still about a run on the banks if things do go to a default level at Greece.
I really am. I mean, it's right now. It's the thing I'm most concerned about. I mean, we've seen this slow motion bank run going on in the last few months, and you and I have spoken about this before. You know, Greece has lost 40% of its bank deposits in the last 10 years, and as we approach this very uncertain election, I mean, some polls say that New Democracy and PASOK are leading. Others still say Syriza are leading. It could go either way. And as we approach that election, for anyone who's sitting with their cash in a Greek bank, it's a very dangerous thing to do. If the election goes the wrong way, they may have to close the banks, declare a bank holiday. And as soon as that happens in Greece, it proves to the rest of Europe that something that they probably thought wasn't likely to happen can actually happen. And if you've got money in a Spanish bank or in a Portuguese bank, you're taking a big risk leaving it in there. So I think this thing could pick up very, very quickly. And we're seeing a lot of political paralysis at the moment with politicians almost seeming to be dictated to by events rather than trying to move them along themselves.
Yeah, we have the politics operating at one level and then I guess the economics at another level. But the market at the moment seems to be following the politics. They seem to be hanging on to the polls that is putting the New Democracy Party, the pro-austerity, pro-bailout party ahead.
Yeah, but it's a very strange thing. The market previously, for years, has always been a discounting mechanism, and right now there just seems to be this fear, and markets don't seem to move ahead of events. We've seen this with the euro. Nobody could understand why the euro was staying above 130 for such a long time. All of a sudden, in the last couple of weeks almost, it's broken below 125. And the danger is we could see a lot of real turbulence in markets the day after this Greek election if it goes the wrong way.
Mm. Well, you are our Cassandra. I mean, say you're right, and we do have problems hitting back at Spain. This news of the $23 billion bailout now of Bankia, the president of Bankia says, think of it not as a debt, think of it as an investment.
Yeah, well, normally you like to make investments decisions on your own rather than have them forced upon you. But the very fact, as you mentioned at the top of the show, the fact that this bailout has grown from €4 billion to €23 billion in a matter of weeks, and alongside that we've had the various regions of Spain announce vastly bigger debts than they had previously publicised, which wasn't a surprise to anybody. It's exactly the same playbook as we saw when Greece first hit the headlines 2 years ago. So the debts are real in Spain. They're potentially a lot bigger than people think, and the chance that they will need an awful lot of money to try and bail them out, which is going to have to come from Europe, is just one more fuel on the fire, I'm afraid.
There is the suggestion in the Telegraph, the UK Telegraph today, that actually foreign investors are already getting out of Spain, and making the suggestion that in a way that makes it easier for Spain to leave the euro.
Well, it's going to become a lot easier for a lot of people to leave the euro once the first person does. It just depends on how bad the reaction in Greece is. The chance that it will have a very, very severe recession, that may frighten other people from leaving. But of course, if Greece turns around quite quickly and with a huge part of their GDP based on the tourism industry, if you can leave, reinstitute the drachma, devalue significantly, you can attract an awful lot of people to what are probably the best beaches in Europe. So the danger, I think, is that Greece turns around quicker than people think, and it makes other countries think, well, you know what, it wasn't so bad. We were all terrified of this Great Depression, and maybe it's not so bad.
And I hear we've got an olive oil glut as well in Europe.
Let's hope so.
Grant Williams, thank you very much for joining.
Thanks, Tikki.